The June inflation report landed this morning, much softer than anyone expected. Prices actually fell from the month before, the first monthly decline in 6 years. For weeks, worries about higher inflation had been the exact thing weighing on Tesla's stock. So today, that pressure finally flipped. We've also got the 3-row Model YL arriving in US showrooms. Tesla's European self-driving miles more than doubling in weeks. A competitor's stock cut nearly in half, and more. This is the Tesla brief, after the close on July 14th. Welcome to the show. A quick look at the stock. Tesla closed up 0.8% at $396.18, while the Nasdaq rose 0.9%, and the S&P 500 was up 0.4. So Tesla moved roughly in line with the Nasdaq on a broadly green day. This was that soft inflation print lifting the whole market, not anything company specific. Let's start there, because it's the thing that actually moved the stock today. The June numbers came in this morning much weaker than economists had penciled in. Prices didn't just rise slowly, they actually fell from the month before, the first month-over-month decline in 6 years. Here's why that matters so much for a stock like Tesla. A big part of Tesla's value doesn't sit in the profits it makes today. It sits in profits that are years out, from Robotaxi, from Optimus, from self-driving. And money you expect to earn far in the future is worth more today, when interest rates are low. When inflation runs hot, the market assumes rates stay higher for longer, and that's hard on exactly this kind of growth stock. That's not hypothetical, it's precisely what happened in June. This same Fed, now under new chair Kevin Warsh, spent last month signaling a rate hike rather than a cut, and that's a big part of what dragged Tesla and the whole basket of high-growth names lower. So today's soft print is the first read in weeks that cuts the other way. It takes some pressure off Warsh, and the growth complex, Tesla included, breathed a little easier. One caution flag worth planting inside the good news. The report also showed a sharp jump in the price of computer software. The Wall Street Journal read that as a sign of, in their words, Americans' widespread adoption of AI, both at home and at work. So some of that soft headline masks real, fast-rising spending on AI tools, which, if anything, is a quiet tell about how quickly the AI economy Tesla is betting on is actually arriving. The next thing to watch is tomorrow. The wholesale price report comes out in the morning, and that either confirms today's soft read or complicates it. 1 month doesn't make a trend, and one print doesn't change the Fed's mind. But after weeks of the macro leaning against Tesla, the direction finally turned. Now to something more concrete on the actual business. The 3-row Model YL has started landing in Tesla showrooms across the US. We've talked about the Model YL before, both as a product and as a China story. What's new today is that American buyers can finally see one in person. As the reporting put it, no demo drives for now, but you can sit in and play around with these units. And that's the step that turns a spec sheet into real demand, people actually touching the thing. The early hands-on notes describe a genuinely premium cabin, a Zen gray interior, a black headliner, launch badging, the 16-inch screen, cooled wireless charging, and, the whole point of the L, a third row a 6-foot adult can actually sit in. Here's why it matters to the business. This opens up a higher price tier on Tesla's best-selling vehicle, at exactly the moment the debate over Tesla demand is loudest. And a more expensive version that actually sells is about the cleanest evidence of pricing power there is. It's one thing to move cars with a discount. It's another to get buyers reaching up to a pricier trim on their own. The thing to watch is conversion, whether the showroom foot traffic turns into orders once test drives open up. Sitting in a car is easy. Putting down a deposit is the real signal. Staying on that demand and data theme, Tesla put out a striking number on its European self-driving progress. Owners in the European countries where supervised full self-driving is approved, the Netherlands, Estonia, Belgium, Lithuania, and Denmark, have now driven more than 50 million kilometers on the system. That's about 31 million miles. But the raw total isn't the story. The pace is. Tesla owners passed 20 million kilometers only about 7.5 weeks ago. So the mileage has more than doubled in under 2 months. Why does that compounding matter? Europe has been the hard regulatory battleground for Tesla all summer. We've covered the pushback from Dutch, Swedish, and other regulators repeatedly, and every kilometer driven cleanly is real-world evidence Tesla can put on the table when it argues for wider approval. One important distinction. This is different from the US Robotaxi story. These are miles on customer-owned cars with a human supervising behind the wheel, not driverless fleet miles. But the signal is the doubling rate. When the data is compounding this fast, the case Tesla can bring to the next regulatory conversation compounds right along with it. There was also a dramatic session for one of Tesla's competitors, and it's worth understanding because of what it says about the broader field. Lucid, the EV maker, saw its stock plunge 45% to just under $3 after an EV newsletter reported the company was weighing options, including going private or filing for bankruptcy. Trading was halted. Lucid pushed back hard. In an official statement, it called the reports completely false, said it has enough cash to fund operations well into next year, and said its restructuring advisor, Alex Partners, quote, has not recommended bankruptcy to management or the board. So take the company at its word on the immediate rumor. The reason this is in the brief at all is what it tells us about Tesla. Gary Black, who runs the Future Fund, laid out the underlying numbers. Lucid ended the first quarter with roughly $700 million in cash, raised another $1 billion in April, sold about 15,800 cars in all of last year, and burned through $3.8 billion. Wall Street doesn't expect it to generate cash rather than burn it until the end of the decade. That's the balance sheet of a standalone EV company under real strain. And set it next to the pattern we've already covered. GM pulling back on EVs, Volkswagen quitting self-driving. The independent EV challengers are struggling, while Tesla is printing record quarters. The competitive field is thinning, and a thinner field is a quiet tailwind for Tesla's pricing power. A couple of quicker items to round things out. On the Tesla Semi, a big Southern California port trucking operator called ATC Logistics is ordering 20 semis to replace 11 diesel day cabs as their leases run out, with deployment targeted for early 2027. On its own, a 20-truck order is small. What makes it worth surfacing is the pattern underneath it. This is now the fourth sizable semi-order tied to the same charging depot, run by Forum Mobility in Rancho Dominguez. It follows orders of 20, 40, and 20 trucks from 3 other operators. When 4 separate fleets all commit around one charging hub, it stops looking like scattered sales and starts looking like the semi's early commercial model actually working. The trucks and the charging infrastructure pulling each other forward at one site. The operator cited the semi's 500-mile range and fast charging as what makes it a real diesel replacement. The thing to watch is whether that depot-anchored pattern repeats at other locations. And on the AI side, Elon Musk spent much of the day amplifying results for xAI's new model, Grok 4.5, including that it took the top spot on a demanding test of long-horizon reasoning, where an AI has to hold a plan across a very long task. The claimed edge is efficiency, solving tasks in under half the steps of rivals, which on these enormous tests means a dramatically lower bill. Now Grok is xAI, not Tesla, so this isn't a Tesla number, and it's Musk promoting his own product, so treat the benchmark as his framing rather than independent proof. But it's worth half an ear, because Tesla's whole case as an AI company rests on the same bet, that Musk World AI can run capably and cheaply on the compute it controls, and the tooling increasingly flows between the companies. That brings us to the one date to have circled. Tesla's second quarter earnings are expected after the close in late July, and Tesla usually confirms the exact day about 2 weeks out. This is the report that puts real numbers behind the record delivery quarter we've been tracking all month. And the central question is a clean one. Did those record deliveries come with healthy profit margins on the cars, or did Tesla buy the volume with discounts? That's what the market will be reading for first. It's also the first earnings call since the Model Y L opened that higher price tier, and since the Robotaxi fleet went driverless in more Texas metros. So any fresh guidance on the Robotaxi ramp or on Optimus timing lands here too. And there's a bracket around it. The Fed decides on rates on July 29th. So a late July stretch could hand Tesla both its own numbers and a rate signal within days of each other, which after today is exactly the combination worth watching. That's the Tesla brief for today. If it's been useful, please subscribe. Thanks for joining us, and we'll see you in the next episode.